You've seen the headlines about Tesla's vandalized vehicles amid Elon Musk's political controversies, events now reshaping the automotive industry's economic landscape in real time. Whether you're a Tesla owner concerned about resale value, an investor watching the dramatic 30% stock decline, or someone trying to understand the intersection of business and politics, this documentary provides the analytical framework to comprehend the full picture. We'll examine consumer activism's impact on major automotive brands, explore what drives these market shifts, and evaluate whether Tesla's technological innovation alone can sustain the company through this challenging period. The economic fallout. Measuring Tesla's market collapse. Remember when Tesla was the darling of Wall Street? Those days seem like a distant memory now. The company that once commanded a $1 trillion valuation has witnessed a staggering market collapse that began almost immediately after Elon Musk's deepening involvement with the Trump administration. This political alignment triggered a dramatic reversal of fortune. While Tesla's stock initially surged nearly 90% following Trump's election victory, the company has shed 45% of its market value since early December. This collapse resembles what investors often call a falling knife scenario. $800 billion in market capitalization erased, exceeding the combined value of Ford, General Motors, and Stellantis. Goldman Sachs analyst Mark Davidson offers a stark assessment. This isn't simply market volatility. What we're witnessing is a fundamental revaluation of Tesla's brand premium. Meanwhile, Morgan Stanley's Adam Jonas presents a more optimistic view. The core technology advantage remains intact. This correction, while severe, represents a buying opportunity for long-term investors. The damage extends beyond stock prices. Edmunds reports Tesla trade-ins have reached unprecedented levels. 1.4% of all vehicles traded in, triple of last year's rate. Geographically, European sales have plummeted 45% overall, with Germany experiencing a 76% collapse. A Deutsche Bank analyst noted, the European consumer appears particularly sensitive to Musk's political positioning, creating an opening for homegrown EV manufacturers. In China, the world's largest EV market, February sales figures show Tesla deliveries nearly halved compared to the previous year. While BYD saw deliveries surge by 38%, BYD has now reached $100 billion in annual revenue, establishing itself as Tesla's most formidable global competitor. Can Tesla's innovation pipeline, including the promised robotaxi unveiling and humanoid robot production, overcome these financial headwinds? Barclays analyst Brian Johnson remains skeptical. The gap between Musk's promises and Tesla's delivery timeline continues to widen precisely when the company can least afford execution missteps. Morgan's automotive sector report concluded, Tesla's financial troubles represent one of the most dramatic brand value collapses in automotive history. The premium pricing power that sustained its margins is evaporating as the brand becomes increasingly polarizing. From boycotts to bullets, the escalating physical response. The polarization referenced by JP Morgan has manifested in ways few could have predicted. What began as keyboard warriors and social media outrage has evolved into a physical confrontation playing out on America's streets, with Tesla properties now squarely in the crosshairs of what federal authorities are classifying as domestic terrorism. Like a spark igniting a wildfire, anti-Tesla sentiment has spread with alarming speed and intensity. Initial social media boycotts transformed into organized protests outside showrooms, which have now erupted into coordinated violent attacks across multiple states. The damage has become tangible and severe, measured in bullet holes and charred metal. Oregon has become a focal point of this growing wave. Tesla's Salem location fell victim when attackers hurled Molotov cocktails at the building, while the Ticard showroom sustained significant damage after being riddled with over a dozen bullets. This pattern of destruction extended to Las Vegas, where perpetrators shot at Tesla vehicles before setting them on fire, leaving behind a spray-painted message, "Resist," on the showroom doors. The violence shows clear signs of organization rather than random vandalism. The coordinated nature of these attacks has prompted a federal response, with the FBI and ATF now working alongside local law enforcement to investigate what they describe as politically motivated violence. The anti-Tesla movement has also caught fire internationally. In France, 12 Tesla vehicles were torched in a single incident, while German authorities reported similar coordinated attacks. This global pattern suggests the sentiment transcends American politics. potentially connecting to broader opposition to Musk's growing political influence. President Trump's response has intensified the controversy, characterizing the vandalism as terrorism and suggesting severe punishments for perpetrators. This unprecedented stance has further politicized an already charged situation. For Tesla owners, the fallout has been personal. Many feel caught in a culture war they never chose. The once coveted status symbol has become a liability, leading some to apply bumper stickers disavowing Musk's politics while continuing to drive his vehicles. Social media platforms reveal Tesla owners expressing their conflicted feelings, many admitting embarrassment about driving their cars, committed to electric vehicles financially, but uncomfortable with the political baggage their purchase now carries. Market disruption: how competitors are capitalizing on Tesla's crisis. Beyond the personal dilemmas of current Tesla owners lies a broader industry transformation that few saw coming. Once the undisputed king with nearly half of the American EV market, Tesla's dramatic decline has created a power vacuum that competitors have been eagerly waiting to fill, and they're moving with remarkable speed. The numbers reveal a dramatic shift in the EV landscape. Tesla's grip on 48% of U.S. electric vehicle sales last year has begun to loosen, with their sales dropping 5.6%, while the overall market grew by 7.3%. We're witnessing a redistribution of consumer interest rather than a rejection of electric vehicles, notes automotive analyst Sarah Chen. This market reversal resembles a chain reaction. With each percentage point, Tesla loses, strengthening the collective position of competitors. China's BYD has emerged as a formidable challenger with charging technology that adds 250 miles of range in just 5 minutes, 4 times faster than Tesla's capabilities. This addresses a critical consumer pain point. As industry consultant Michael Torres observes, charging speed remains the final psychological barrier for many potential EV buyers. European manufacturers have collectively surged in their home markets, with Volkswagen, Mercedes, and Stellantis brands overtaking Tesla across the continent. Tesla's collapse in automotive strongholds is particularly telling, down 76% in Germany and 63% in France. Digital behavior confirms this trend. Cars.com reports searches for non-Tesla electric vehicles have increased by 12%, while Tesla searches have declined by 7%. Online search patterns typically precede actual purchasing decisions by 6 to 8 months, explains digital marketing specialist James Warren. What makes this market disruption particularly noteworthy is how traditional automakers have strategically positioned themselves to appeal to disaffected Tesla owners. Some compete on price with comparable performance, others push technological boundaries where Tesla has faltered, and many present themselves as uncontroversial choices, offering high performance without political associations. The question facing the industry is whether this represents a temporary setback or a permanent restructuring of the EV hierarchy. With Tesla's brand loyalty increasingly questioned, traditional automakers have a rare opportunity to reclaim leadership in the electric mobility transition. Innovation versus image. Can Tesla's technology overcome its brand crisis? Can groundbreaking technology really overcome a tarnished reputation? While competitors exploit Tesla's vulnerability, Elon Musk isn't surrendering. He's doubling down on a vision some analysts call impossible. In a high-stakes gamble that will either cement or destroy his legacy, Musk has announced Tesla's robotaxi service will launch in Austin by June 2025, using existing vehicles upgraded with full self-driving software. This announcement comes at a pivotal moment when Tesla's technological promises face unprecedented scrutiny amid its deteriorating public image. Inside Tesla, Musk is projecting unwavering confidence. During a recent all-hands meeting, he urged employees to hang onto your stock, despite the ongoing price decline, painting a future where autonomous capabilities would dramatically enhance the utility of Tesla vehicles. His vision of abundance for all hinges on revolutionary products that barely exist today. Autonomous taxis and humanoid robots that would redefine convenience and utility. Wall Street, however, remains unconvinced. Wells Fargo analysts express significant skepticism about the robotaxi timeline, noting a high probability of delay or underwhelming launch. This skepticism is well-founded. Waymo has already deployed functioning driverless ride-hailing services in Austin, the very market Tesla is targeting. Both the robotaxi and humanoid robot initiatives face substantial technological hurdles. Despite Musk's claim that Tesla's Optimus is the most sophisticated humanoid robot on Earth, established players like Boston Dynamics continue advancing their technologies without the distractions of running a car company in crisis. Tesla's affordability strategy also raises questions. Musk has mentioned a lower-cost Model A variant, but industry analysts doubt both the timeline and feasibility as manufacturing costs remain high. The supercharger network, once considered Tesla's ace in the hole, could become vulnerable as financial pressures limit expansion capabilities. The technology versus image equation creates an unprecedented test case in corporate America. Tesla's vision once transcended political boundaries, appealing to environmentalists and tech enthusiasts alike. Now, as the company's identity becomes linked with its founders' political activities, even groundbreaking innovation may not be enough to repair its fractured consumer base. As we've seen throughout this analysis, Tesla's future hangs in a precarious balance. Industry experts predict uncertain long-term prospects due to both sales declines and rising competition, particularly from Chinese manufacturers like BYD, who continue to experience remarkable growth. History teaches us that some companies successfully navigate brand crises through strategic rebranding, while others fail to adapt to changing market conditions and consumer sentiment. This situation represents a watershed moment for corporate America, potentially redefining the relationship between executive personal brands and company valuation. In our increasingly polarized marketplace, will technological innovation ultimately overcome political controversy? The answer may establish new precedents for how business leaders navigate public positions in an era where consumer values drive purchasing decisions like never before. Let us know your thoughts in the comments below, and please don't forget to subscribe to our channel, turn on notifications, and like us to stay informed about our content.